Hey everyone, Tracy Fisher here with Marketplace Sotheby's International Realty. Coming back to you today with another lending update from Lynda Myrick with Caliber Home Loans. Lynda, thanks for joining us today.
You bet, Tracy. Great to see you.
Yeah, good to see you too. You're looking beautiful as always.
Oh, gosh. Likewise.
We were just discussing the lighting. That's become a new topic these days, is trying to get the perfect lighting for these calls. So not easy. Well, I just wanted to update everyone. The mortgage market has been, needless to say, a little bit dynamic lately. And so it's helpful to come out with these updates, or we hope it's helpful, every week or so as we know more and as things change. So invited Lynda to come back on so that we could talk about a few of these changes. So let's just dive right into it. Let's unpack it. What are some of the new challenges buyers might be facing in the mortgage arena lately?
Turn my sound down here, excuse me. Well, the biggest challenge is verifying their employment, because unfortunately with COVID-19, people are getting laid off, and it's becoming a daily occurrence. So through our process, we're required 3 days before the note date. So the note is part of the closing package. So when you sign final loan papers, you sign the note, and within 3 days, we have to verbally verify that somebody's employed. Sounds pretty easy, but it's kind of hard to get hold of people in HR, with people working from home. We'll have circumstances where we'll have two people buying, like a couple, and one will be verified, and the other one will finally be verified, but then the other one's expired. So it's just a really, it's a challenge verifying the employment, really. And
Yeah.
unfortunately for those people that are furloughed or on leave, we simply have to wait until they go back to work.
So are there any benefits? I mean, obviously there's huge benefits of being employed right now, but I mean, if someone does have stable income and they're, W-2 or 1099, I mean, would you say that's a huge benefit right now in terms of maybe having an edge in this market?
Yeah, I mean, that's the thing is, we know that we in the Pacific Northwest have an incredibly competitive market. So this could be a time where somebody could come in and they might be more likely to have an offer accepted when they have verifiable employment. So it's an opportunity for people right now.
Yeah, absolutely. No, I'm seeing that as well. Are there any challenges with like 1099 employees, for example, and what can people do to help? I know for the first time, really, when I'm working with buyers, agents are starting to ask lenders those questions. They would not necessarily have distinguished between W-2 and 1099 or gone that in depth, but now they are asking. So for our 1099 employees that are self-employed or independent contractors, do you have any advice?
Yeah, so there's guidance on that as well. So 1099 employee, you're right, is self-employed. They may file Schedule C, or they may be an LLC or an S Corp, but regardless, self-employed requires tax returns, and we're required to obtain bank statements to show that deposits are regularly going into the accounts to document that they're still earning income in this time.
Okay. So we're seeing that the requirements are continuing to be more stringent, particularly during these dynamic times. So verification of employment is a big thing that we're seeing, both at the beginning of pre-approval and then right at the end of closing. And okay, good. But it can, I guess the positive note here is that it can give you an edge in this competitive marketplace. If you know you have that stable employment, that can really help.
Absolutely. And we're being proactive with customers and getting human resources contact information up front so that we can prepare to make those phone calls throughout the process. But yes, somebody can have a great edge right now.
Okay, smart. In our last video, we talked about forbearance, and that forbearance on your mortgage does not equal forgiveness, and kind of some of the pitfalls. Certainly use it if you need to, but if you don't need to, really kind of caution people about what those risks are. Are there any updates with forbearance at this time?
Just received one this morning, and it was kind of vague, I'll be honest, but it was from a reliable source. Not to be mysterious, but I subscribe to a website called MBS Highway, where it forecasts interest rates and market trends and whatnot. So it's very reliable. But they said this morning that there's news that if somebody engages in forbearance, then they may not be able to obtain a mortgage loan in the next 12 months. So that means that, the opportunities we just spoke about, somebody lose out on an opportunity. They won't be able to buy a house for 12 months. They won't be able to refinance for 12 months. And furthermore, if, after that 12-month period, they would have to make the loan current, and those payments that they did have the forbearance on them didn't make, they have to make it current and make up for those if they were to do another mortgage transaction. So again, if somebody really needs the forbearance, absolutely by all means. But if there's any way to keep making those mortgage payments, you're just going to protect yourself for future opportunities.
Okay, no, that's good information. I know when we last spoke, it was definitely going to hurt you on the refinance end, but now not being able to get even a loan for 12 months could really.
That's 100% verifiable, and I just need to go on record stating that they're saying that that's what it's looking like, and we'll continue to update folks as we have more information.
Okay, and I should mention that today is actually May 1st, so happy May Day, everyone. And we are seeing things changing, I would still say fairly rapidly, I guess maybe on a week-to-week basis. So again, we'll continue to keep you updated as we know more, but as it stands today, May 1st, this is kind of where things are at right now. And it is nice to see the mortgage.
At 11 o'clock in the morning.
At 11 o'clock, 11:40 this morning, yeah. And it is, I have to say it is encouraging to see more stringent requirements come in. I know that that might be a pain for people who are looking, but that's one of the big issues that we had 10 plus years ago, why we got ourselves into this kind of recession mess in the housing crisis. So these, requirements are built to help protect us from getting into another housing crisis and protect people. And then one of the other hot topics, especially, as you mentioned in this market, I mean, our average price point is nearing most people's jumbo markets anywhere else in the nation. So our jumbo market starts at what, 741-ish?
741, 500 is the high balance conforming loan amount. So if you want to borrow more than that, then your loan is considered a jumbo loan.
Jumbo, okay. So there's a lot of mortgage companies right now not even doing jumbos as protection measures. So what are, if you're in that higher kind of 750 plus range, what are some of the things that people can do to, secure a purchase without having to go that jumbo route? Or is there anything?
One thing that we're doing is we're keeping that loan amount at that 741, 500. That's a magic number. And then we're able to utilize what's called a piggyback home equity line of credit, or HELOC, to supplement the rest of it. And you'd still expect to put down 10%, 5% in some cases, but you can use that home equity line of credit to bridge the gap. And that loan is an interest-only loan. It's based on the prime rate. It's variable. It's kind of a short-term solution for people, but it is a way to get into a home without having to dig deeper into your assets in order to get to that 741, 500.
Sure. Okay. And then once they get into that, can they refinance later down the road to get out of that? Okay.
The jumbo market will come back. And as a matter of fact, I can speak for Caliber because that's where I'm, employed and where my license is held. There's talk that we're bringing a jumbo product back very soon. Don't have any details, but again, we'll continue to update. So they will be back at some point. But for right now, that's a great solution, is to supplement with
That is good information. Yeah, I mean, that's the thing is, this market is still moving. I think people have kind of settled into this new normal, and, people were still seeing multiple offers. There are some negotiation points that we weren't able to do in a more competitive, I guess, normalized market. But all of this information is helpful so that, with your employment verification and with the jumbo, the fact that these people looking in these higher ranges do have options, they're not just stymied right now, is encouraging, I think. So thanks for bringing that information to us.
I mean, we want to help the housing community for sure, but there's definitely more stringent guidelines.
Good. Well, thank you so much. Is there anything else as we wrap up that, how are rates doing? Is that something you can?
Oh, goodness, rates are low. I mean, I've never seen them this low before. They're in the low 3% range, and the interest rate depends on, someone's unique situation, but there's opportunity out there for sure.
Great. Well, positive message overall, I think. Thanks again, Lynda, for being on and for, constantly bringing us updated information. And we'll just continue to do this.
Thank you so much.
Awesome. We'll have a good Friday. Happy May Day, and have a good weekend.
You too. Thanks.
All right. Thanks. Okay. Bye.